Hello, everybody. Welcome to Wednesday. I want to say Wednesday. It's Wednesday. Welcome to Wednesday live trading with us here at Tradeify Crypto. It is just me at the moment. Ayush was here with me, and Anastasiia is going to be joining us in a minute. But we seem to be having a little bit of internet gremlins slowing us down. So I hope everyone is doing well. Let me pull up the chat and let's see who we've got with us in the chat today. Let's see who we got. We have got Muyanyahoy, I think, who's waiting. Glad you're excited. Glenn, good to see you, my friend. Miss K911, good to see you. Good CPI to you. Very good CPI indeed. And who else we got? Just the three of you at the moment, it seems. There's 5 of you watching, so 2 of you are not chatting in the chat. Get into the chat. How is everyone doing? Let me know what you're looking at. Let me know what you're trading. Of course, I've got PaxG open.
Roman, you can hear me, right?
Because what else would I be trading?
I can't hear Mike.
So yeah, we've been seeing quite the sell-off on gold lately, as you can see.
Don't put me in.
We have just about
can I restart my system and come back
past
again?
this previous low. So we're now probably going to see us pushing further down, going towards the 4,000 mark, I reckon. But let me know what you guys think. Glenn can hear Ayush. I can't hear Ayush. Is Ayush here? Where is he? Oh, he's left again. Oh, okay. Technical gremlins, guys. Technical gremlins do not want to cooperate with us today. My sincere apologies for that, but hopefully then I will suffice. Muyanai Hayohoi 2921. The other person you're hearing is Roman. Roman is our producer in the background, so that's why you can hear him in the background. He's just telling me what's going on and what has happened to Ayush. So yeah. So yeah, looking at PaxG, looks like we're going to have some more selling pressure coming in on the 5-minute. We've obviously broken past this, so not really something I'm going to get into right now. But we'll be looking for some kind of probably pull back up and then try and get in sells further down. We're looking for selling areas. Would be interesting to see potentially a sell from that area there. This inside bar would be a nice little target. Either see it taken or left behind and then keep on going. What else would I be looking for? Yeah, I think that's probably at the moment, as things stand, as price actions sits there. That's probably the most sensible place that I'd look for a sell. Having said that, if you look at the price action here, I don't know if it's going to come back here in the near term. Probably might see a retest of this instead, this area here, rather than that 15-minute zone. Reason being is you've got this attempted kind of change of direction, and then you have this one retesting the wick and engulfing the entirety of that body and pushing down, and then that wick was retested here again. So my strategy tends to be looking for those kind of retests on those. So that's what I'd be looking at so far. Glenn says, look at hype. That's been good to me so far on scalps. Happily, Glenn. On the 5-minute on scalps, I
can hear him now.
I don't know what Glenn, I'd love to know what you're seeing, because that right now for me is a little bit too choppy this morning. I can't really see much that I would like to be trading there. Let's have a look at the 15-minute. Yeah, 15-minute also doesn't look particularly nice. I'd probably look to see whether this holds and then maybe look for longs. But I'd want to see some kind of setup on that. Let's see, what do we have in that area? Do we have anything? Yeah, I mean, I'd probably want to see like a really nice wick rejection here on the 1 minute, and then I might look for buys on that. But let me know what it is you're looking for in particular, and we can take a look. But at the moment, I'm not, just from me personally, I'm not sure I would want to be getting in on hype at the moment. Oh dear, looks like it's possibly going to break that area whilst I'm talking. If it does, then for me that confirms more sells coming in. Look at the 1 hour on hype. Let's see what it's saying. Yeah, it's already broken this level, so actually I think it's fair to say it's going to have more sells, maybe coming down to this previous support area here. It's broken past that zone, so yeah, sells look good for hype at the moment. Look. Yep. Yeah, I will reconnect and I'll be back in a sec.
Okay. I can share my screen real quick. Yeah. Yeah, I'm sharing my screen now. Okay, everyone. Welcome, Monai Hoj 2921. Let me call you 2921 instead of your entire name. It's sorry, I can't spell it, but you're asking that. I have a question. Did you bag Lab USDT? To be honest, I don't even know that kind of coin exists because I really trade few coins in the crypto market. Yeah. So Glenn, you're asking the hype. How's hype treating you on the lower time frame? Because I have never taken any trade on hype, to be honest, but it looks something which gives me vibe like Zcash. So I think till now it's looking good, and after the really good pump from the upside, I think we are finally going to take a retest, and let's see where we can take a retest on the higher time frame. Let's go to weekly chart. Let's see what's really okay. I feel, yeah, this can be the next area where we can look for a continuation higher, and if we invalidate that area, maybe close lower, then price will continue till this point of control. Yeah, so either reaction from 53 or directly going to 40 on the hype on the higher time frame. And we have Mike back, and now it's looking good. It's without any glitch.
Can you hear me okay?
Is he? I can't hear him.
Can you hear me?
So it's like someone who joins first and the last one can't hear. Can you guys write some spells in the chat so Mike can also join us, because I was also struggling today. And I'm very okay with the glitch and stuff, because you guys know that in the London stream, I have to get banned for 3 minutes in order to start the stream. And I have pretty much done that 3 times. So I believe totally. I call a mod, psyop, tag him in the chat, get banned for 3 minutes, and then we start the stream. And then that's the only way people can hear me. And I actually believe that glitch is something Glenn knows. Glenn is laughing. And I actually believe that is true. Yeah. So this is my level on hype. And I think it more looks like a gold sell-off trade which we had in the range right now, and also we have CPI in 15 minutes, and gold is looking really great. It is just dumping, and I think we are very close to take out this sell side liquidity. This low at 4102. Let me increase the text. Yeah, so you guys know that I was like waiting for this area to get whole week to get filled, and think soon. So I think we are far away. Only how many points? Oh, it is all black. And okay, I think 100 and maybe 30, 130 points away by taking out this sell side, and it gave really nice entries. If we talk about this trade on the gold, rejecting from this high volume node edge, closing below the point of control, and heavily downside mover because we have some aggressive sellers coming in this side. And I think Trump said something on the, I don't know, he said something related to Iran, and I don't really care what he's saying, because either he will ruin my trade or maybe give me the TP. So had some movement in this area, but anyway, we are continuing lower on the PAX-G and gold. Let's talk about Bitcoin, and as we analyzed yesterday, that market was ranging in this area, and we had a really good flush at the 8 a.m. candle straight to 61,000, and I think we are in a range because we have Ethereum in range as well. So after a long time, we can see Ethereum is accepting the different strength. So if you are shorting Ethereum, and I'm not saying you are in the wrong side, but you can say it would be difficult for Ethereum to take all the sell side, and so yeah, I mean, it is always good to have a look on the both pairs. But if you are someone who's more focused on the main pairs like Ethereum and Bitcoin, what we can do is go on higher time frame like 4 hour, apply the volume profile, and look for these low volume areas where we can expect some rejections, and wait for one or the another pair to enter that zone, and after some confirmation we can look for continuation. And also I think we had enough talking on the volume profile. I'm going to add liquidation heat map chart again in the next session, where I will explain you guys how to use that tool in order to understand where we have resting liquidity and aggressive trades. So that's my next plan. So it's like trading view and a software, and that's it, nothing else. Okay, I forgot about the motivator, but yeah. So and we covered hype, and let's take a look at Zcash. Make sure to hit a like. We have 10 people watching us. We are very close to 2,000 subscribers, slowly achieving that milestone. Let's take a look at Zcash. And Zcash, yeah, so okay, I have something to actually is it Zcash? Yeah, and let's take a look at what area we got rejection from in this pair, and you guys can see that exactly at what we learned on the yesterday session, at the edge of this high volume node working as supply, and also you can see the low volume node getting rejected here. And let's take a look at it on daily time frame. See, look at this gap, and also we can say it as this entire FVG, fair value gap, but instead of fair value gap. We can combine volume profile and make it more powerful and useful instead of waiting for this fair value gap. Can I say this is an IFVG and price is going up? No, I don't think so. IFVG is like inverting the low volume nodes. That's how they work. Yeah. Afternoon, Jonathan, Mickey, and welcome back. I think long time no see, and you have a really nice profile. I think it's the same one with the fairy tale. Glenn, don't forget Roman's Clash. Roman, people are really taking care of you. Clash, US. I don't know. My hand shivers when I click on Clash. I think yesterday, Boris said that sell this thing, and we are pretty much down. Yeah. It is. Let's see, where's the bottom? Oh, on the high time frame chart is on the left. I think we are going to tap this low, and let's see where we have LVN. We are actually okay. So what, Roman, for you, what we can expect in this zone is if we fail to close near the zone, I think we can get continuation higher. But if we fail to react bullish from this zone, then I think it can take this low as well at 0.003882 on the Clash. He's saying okay. Okay, all right. I can see 10 people watching, and there's only 3 likes. That's not fair, guys. I mean, make it 100. I miss that guy who used to pump the likes. If you're listening for the last time, can you please pump it to 10,000 likes? I know I'm asking a lot, but I want to see what you're using, and we'll keep on requesting till you crash out and write something in the chat. Okay. So yeah, and is there any coin which Jonathan Mickey is saying, now the pizza goes in my stomach, waiting for Alex to caught up to the pizza be owes me still. So I think he owes me something as well. He promised me, and maybe we were playing some games, and he said I'll do this and that, and from that day we never had a word. I'll ask him if he joins today. Yeah. So let's take a look at Tau. Zcash and Tau are the best pair for the lower time frame scalping, and what a beautiful reaction on the 4-hour from this value area low. And also, instead of giving them names, let's keep it simple and simply mark this area and just follow the trend. And we are actually in a support zone, so break below we can easily reach till 196. And let's take a look what we have on lower time frame. I don't know why many altcoins, gold, Bitcoin, Ethereum, and there was one more coin which looks really similar on the lower time frame. Yeah, Hype. So Hype, gold, Bitcoin, Ethereum, Tau. Yeah, these coins and pair, it looks they're very similar on the lower time frame, reacting from the higher time frame resistance and just going lower. But I'm more interested. Okay, so yeah, and actually I took a screenshot of this range to show you guys something I mean, I thought that in the before we start the stream, I think the structure will change, but it is still the same. What I can do is let me remove everything, and what I'm going to do is mark this. This. Where is the tool? Where is the tool? Yeah, this circle, which we use as support zone. And if I turn on the session volume profile, it is allocated where we have the point of control of Saturday, 6 June 2026. And you can see a very good reaction from that area. And you can see how beautifully it really connects together at one place. That's the reason behind using the higher time frame wick. So let's say if I don't have any anything to use on chart, let's say don't give me poly profile, just give me candles, still I will manage to trade near some areas. So and let's focus on one pair today. I think I'm done explaining every single pair, and it's time to do the same thing I do every single day. I think I lost the sentence anyway. Please excuse that. Looking at gold. Oh yeah, you can see. I think we are going to smash that level before CPI, and visible on the all intervals. So from the background, Roman is asking, can you explain the impact of CPI in the market? But he's asking a wrong person right now, because I don't really look at the numbers and stuff. I just wait for the release. Never trade near news, and trade after we have some impact. So that's my way of treating these newses. For now, I'm just waiting for this area to be taken, and yeah, let me know, guys. Is there any pair which you are looking at, or are you already in a trade? I would like to take a look at the pair, the coin which you're trading. Please don't put any weird coin which you have not even seen. Yeah. Positive CPI results, market goes up, negative market goes down. Yeah, that's the thing which everyone says, but it happens really few times. So, but I miss. Let's see how CPI moves today in 5 minutes, and I think I have never seen CPI doing the CPI thing, which like zoop zap, putting the buy stop, sell stop, and selling the evaluation in one single candle in some seconds. Oh god, I think I miss those moves. And I'm just watching because I can't really talk English. But you are typing in English, and you don't have to talk. You have to actually read and listen. At 2921 guy. I don't know what you actually mean, but you can. Listen English. I'm sorry. I'm really sorry. Okay, so on high time frame, I think let's go to Motivate. Let me load that thing. I know it's going to slow down my trading view. Anyway, but we are going to load it and see what we have on the footprint chart. ChatGPT translate. He's saying haha, maybe using Google Translate. And I don't know Roman, can we do we have some feature where they can? No, I'm not sure. YouTube live streaming. YouTube have some sort of feature where you guys can understand or maybe hear on real time, maybe in your language. That something happens when we upload the video. Yeah. So you guys can spam this in the YouTube support email that we want this feature. It is not Hindu subtitles, it's Hindi subtitles. Glenn. So yeah, and I think today's sorry, Ayush can't join your at the moment wish list. I try to speak to my ISP about my internet. Oh, it's Mike. Okay, yeah, all good, Mike. Or I don't know. I think maybe we'll stream tomorrow then, if not today. Live, I don't think can have subtitles. Yeah, there. I mean, I'm not sure about the subtitles. Maybe yeah. No subtitles. But I think you can watch it in any language, whatever YouTube provides after the stream. That's the normally we have in any channel. So yeah, not in the live market. I'd love to know how you arrange your charts with the candle displaying like that. Oh, it's an indicator of this. It's an indicator, ICT high time frame candles by Fadi, which really helps me to take a look at the high time frame candles. So yeah, you can do some twitching, some settings, and it will work well. And that's something which I'm using from many years. So my magic didn't work on mic internet. Please give it another try. You know, maybe write something in chat for mic internet connection. We might see him joining us again. I will do live. Robot is saying I will do live translation. He said Robot is a good boy and will send me a cake. Promise. Good one. Good try. Let's see if you get your cake or not. I saw other traders using indicator, like it's really confusing. Oh, so you mean this indicator is confusing? There is nothing to be confused in this just indicator which shows you high time frame candles. You mean how to use it? Then that really makes sense. Okay, look at CPI, not really happy going lower, instead taking out all the sellers out, and then I think it will dump from this point of control and the gap we have. Let's see what happens. Let's take a look at Nash tag. Same reaction here. Ciao. Now Ethereum pumping from the support, and Bitcoin. Oh yeah, makes sense because we are already in the support and not really ready to close below this point of control of this range. So I think accumulation, manipulation, and distribution are lower after taking out these highs. Yeah. So yeah, look at this. Look at this reaction. Always have to wait for some data to print during news, and then the best time for me to enter again after if we have some news, it's waiting for 60 minutes, 1 hour, and then looking for some setup. So if you're the 2921 guy, if you think that let me solve the confusion you have, so it's basically an indicator which gives you as many candles you want to take a look at on higher time frame. So it's like if you're someone who uses higher time frame or maybe analyzing the higher time frame charts, and executing on lower time frame, because there are some traders who really don't care what's happening on the higher time frame. Many on the social media I have seen. So if you are a scalper, I assume you are a scalper, that's why you're asking this question. So it's just having a look at what happened in the previous candle, or maybe where we at. Are we close to previous candle low, day low or not? And we have Anastasia with us. I'm not alone anymore. So
no, you are not. Sorry, I've had crazy technical difficulties today, but I'm really happy to be here and exactly on the CPI, huh?
Yeah.
How are you?
How are you, absolutely fine. Yeah, I'm doing great. What about you?
I'm good. I had some TPs. I had some stop losses already in the morning. So I've had my ride before the CPI, I would say.
So you closed it?
Yes, I find I'm in profit for the day still, but I always close the trades before the CPI. I don't hold them anymore because you really never know.
Yeah.
Are you in any trades?
I was actually in shorts from this area, but it stopped me out. Had a really tough day today. It was something like this, and I put my stop loss here, and then you can see that's my trade. I was looking for something like this.
I see. Yeah.
It went lower, took me out for some ticks, and then continuation. That's what gold does to people till they give up.
We told you before, it's a love-hate relationship, you know? It's a love-hate relationship with gold. I was in shorts as well. I'm going to share my screen, and there's some charts too. But we had the CPI, regarding the CPI that just got released. 1 second. We had, in a matter of fact, monthly lower than previous one. And the yearly higher than the previous, aligned with expectations as well. CPI as well as slightly higher than the forecasted. So overall, not a dramatic look, but also not to say that it's good news regarding the CPI so far. So we didn't really get any good information. So for gold, I did have this analysis actually on Monday when we were talking about this on the previous live stream. I was saying that I'm overall short biased on gold, and I was waiting for gold to go back into the zone 4,300 to 41.19. And if the price would break 4,300 and close below, I would continue to short, which I did yesterday night. Unfortunately, I had several trades and I went to sleep and I moved my stop loss in profit. And it kicked me out in profit and continued. So I took only a small part of the profit compared to what I could have taken on this one candle. So the first 4 hours of the day. And then in the morning, I was taking another short, which closed in profit because I was waiting for the price to retest the point of control in the value area of this candle, which it did. And it continued lower again. And then I took another short here. And before the CPI, I closed it. So I had several shorting attempts. I'm gonna go back to 30-minute time frame here and show you exactly. So this was Monday basically. We were talking about the Monday on Monday that I was looking for 4,300 closure below and retest, which the price finally did after the long consolidation. So that was tonight. Again, I re-entered the short during the night. It did kick me out in profit. So I took only the small part of the move compared to all of this. So when I woke up, I was like, okay, that's quite sad. But it is what it is. Profit is profit, I'd say, in this current market behavior. So we see that the price started to pull back. And I was taking this whole move from the night, basically the whole 4-hour candle, which would be something like this as well. And the point of control of the first 4 hours of the day was 42.25. By the time I was at the chart, it was trying to half reject it, half kind of go above it and close above this level. So I was waiting for some confirmation that the price will close below. It did finally. The 30-minute candle, one of the 30-minute candle, 9:30 I think, did close below this 4-hour time frame point of control. We were still above the value area low of their 4-hour candle. So I was very careful. I took only part of their risk, but I did enter short on the pullback and I held it until 41.90. And then again, I was take a couple of stop losses here because I was expecting reversal from 41.90. It was weak in all the sides, and then I finally re-entered one more short here, so I'm in profit for the day. Smaller profit than I could have, but I'm in profit. And now for the CPI, I was not holding the trade anymore. So I'm still I'm waiting for after the CPI to see if the price is going to close above 41.90 or not below, because if we do close above 41.90 and 4200 zone, I might consider actually entering some longs from here. We do have some big volume coming in. So this was a short, then another short, and 41.90 now is my key zone to see if the price is going to reverse or not. And actually, besides gold, I am looking for longs on Bitcoin, which I closed in a small loss before the CPI as well. And now it's exactly where I wanted to be. But I did choose to be safe on CPI rather than try to follow it through it. So, it's always a decision that we make. So now I'm actually considering to re-enter longs on Bitcoin. I do think that, but I do think it might again pull back towards 41 to 40 before continuing, because we are still testing the value area high of the day. So this is the value area of the day today. And we tested the previous cluster here 2 times. It wigged down quite a big volume, quite a big squeeze here. And now I really wanted the price already before. In the morning, I did have these 2 scenarios, basically. I wanted the price to close above value area high, preferably. And then my targets are 62,620 and 63,300 within a day. So that's something that I'm waiting for Bitcoin as well. And the reason being is because also, if we look at the little bit bigger perspective on Bitcoin, well, bigger, I mean, intra-week kind of, because bigger we are short. So overall, I'm really short, I'm really bearish on BTC at the moment. But we had this consolidation here, this zone that the price tested one time, the one of the previous weekly point of control, and this is the monthly point of control as well, dynamic one. So we had the cluster volume, the price tested it, held it all this time, and we're still above the value area high of this whole range. So as long as we hold above this, I'm looking for the move to the upside. And also, and one of the other things is, this is one of the only few patterns, actually the only price action pattern by now that I continue to trade, which is a head and shoulders pattern in combination with volume. So this is a left shoulder. We did have the consolidation on top. We did break the previous lows, and now I'm expecting the price to come back towards 62,620, 6,300 area, and then from here to short it. So it would be completed head and shoulders pattern from here. So the lower risk, conservative risk ID is actually short. The higher risk ID is too long into the short area. You know what I mean? So that's that's another setup that I'm looking for.
I'm also waiting for same area, like you said, this point of control of this range, and we might see continuation from the 63,500. So just being careful near this zone. Pretty much in a very, very bad range from the yesterday move we have. It's just a really good flush at the 8 a.m. and just range after that. I thought it will continue more lower, but we had low volume in this zone and also value area low. That's why, and also this wick as support. So that's why it's holding price. But I'm really happy to see that Bitcoin is weaker after a long time than Ethereum. Ethereum is something which is not good for shorts if you are looking for the continuation lower.
Yeah.
So finally, I think for me, it shows that we are in a healthy market where both coins are not really following the same strength for a longer run. I think we saw Ethereum in the same weakness for 2 months, and now we are finally back normal.
So you are bullish on Ethereum right now?
I mean, for longs, yeah, I prefer Ethereum to reach first at the 1681 than Bitcoin. Yeah, so I think for bulls, Ethereum is good. For the bears, I think Bitcoin is good when we reach that supply zone we have at this area.
Oh.
Yeah.
Oh.
I mean, it's only about strength and weakness. It's like trading a pair which will give me the TP early than the other one.
You know why I'm asking? Because actually, if it comes to Bitcoin, I'm locally bullish, high risk, but overall bearish. You know, this whole thing. But if it comes to Ethereum, I see that it can potentially go slightly higher. But it's so bearish for me overall because we had a very slow recovery. We had zero volume in interest on the increase, like when the price was going up. We had lots of bearish volume coming in on tops around 1690, 1700. And all the volumes are now above the price mainly. So for me, if it comes to Ethereum, I see that it might go back to 1680, 1690, but I am completely not willing to to long this. I'd say for Ethereum, I'm probably 100%, okay, 90% short biased. I'm probably not gonna take a risk of actually longing it, taking a long towards the short zone like I would do for Bitcoin, for example, now. Like all of it, you know, for Bitcoin, at least we have volumes below, like from the monthly perspective, we have this big range and so on. Yeah. But for Ethereum, we have this range here, we have this volume, which we tested multiple times already. We have this range, which the price already came one time, second time, third time, and we keep creating the lower highs. So the price keeps struggling to even renew the local small highs. So I don't completely see any strength of buyers for Ethereum at the moment. I don't know.
So I mean, you mean that we are very close to this point of control on Ethereum that might hold price here and throw us early than Bitcoin. So longs are good, and I think in the different direction, but I understood the point that Ethereum is not good for longs because we are very close to this zone on the higher time frame than Bitcoin.
Yeah. I'd say not because it's close, but because we tested this zone so many times that it's holding now the price, that every time the price tests it, there is a higher chance of it being broken. And because with Bitcoin, for example, we saw the strength on recovery when the price hit, let's say, 6,800. Again, we squeezed down, but again, the price recovered. Now, again, we at least are trying to renew the local high. So there was at least some kind of recovery, almost 50% of this move, actually. But for Ethereum, yeah, kind of, but I don't know. I don't know. Even from a price action perspective, Ethereum looks for me kind of bearish. I don't know. I don't trust in it. I don't trust Ethereum right now.
Yeah. And on gold, I think we have to wait for at least NY open, because whenever we have big news, I think I wait for 60 minutes for market to cool down to give us proper direction and look at this low, which were really close to take, and that's what gold does. Like it will be very close to your TP to 1 point, maybe 2 point. It will reverse and it will stop you out with some ticks and go into your direction. I think I don't really have problem taking an SL, but it really hurts. You can see it's just wicks, not even body. Stop me out. It went really personal with gold today. Anyways, I'm sitting on my hands.
It went really personal, he says. But how did you place your stop loss? What was the reason of the stop loss there?
I was assuming that we had really aggressive sell coming in this zone, and many buyers were absorbed. So I thought that it would be difficult for price to tap the same again, because we tapped it twice in this zone. So I thought it will just flush till this 1:1 trade I was looking for, and it went just half and came back. I actually thought to I mean save my trade for the day, but I was like, no, it might go lower, but and then it just stopped me out and continued lower. It looked really stupid, and I was actually recording that trade, and I was like, yeah, it's a meme now, not a good trade.
Yeah, gold is like this, especially before the big news events. Honestly, I actually fairly honestly forgot completely it was a CPI today. I think I need to reload my trading platform, so if we can switch to your screen for just a moment so it doesn't hang, because I want to show some things from the order flow. Yeah. I'm gonna quickly reload this, but it's gold is like this sometimes, especially before the news events, and I forgot completely it was CPI, and then I saw I think it was either before the CPI, or I can hardly trust that it was before, because Trump again was threatening Iran with attacks. As he was doing today again, there was again something that he is ready to attack and so on. But the gold just, after this range, it just dropped down, and I was in a negative, and I'm like, oh, it's also CPI today, and it actually came to my mind. I'm like, oh, it's actually on Wednesday.
Yeah.
Oh, yeah.
I mean, we actually rely on your geopolitical analysis, but today you are the one who don't know about news. That's really scary, because every single day I'll be like, oh, I don't really have to take a look at what's happening in the world. I will have Anastasia coming in and she'll explain what impact it will have on the market.
Yeah, but I remember normally. It's just I had a very busy day today, and I completely forgot that it's already Wednesday.
Yeah.
Struggling with some technical things for a couple of days already. Okay, I'm gonna reshare my platform. Yeah. So are you looking for any more trades? You're going to be waiting now for the market to cool down a little bit, because we have a New York opening in just 40 minutes from now. Have you looked at any other things today besides gold and Bitcoin?
No, I think I did, but many altcoins have the same kind of structure. If you talk about the hype and stuff, hype actually have same price action like we have on gold. So not really looking at anything other than gold, Bitcoin, and Ethereum. So
no. I'm gonna open TradingView for a moment.
Look at Dow taking support at this low volume node, and it's pretty much in a range. We also have a fair value gap, and the fair value gap worked well, but not always. And also an IFVG. How many of you use IFVG? And it is something which really helps you in your trading. If yes, and type yes in chat. Be honest. If no, then type no. Because I tried it, and it went so bad. So
really?
Don't use. Yeah, instead of using random gaps, you can just trade the volume profile, low volume areas, and just use it as supply demand instead of every gap you have in the market.
Yeah, I have a very skeptical opinion on all of the things regarding the ICT concepts. The guy basically took the existing concepts and sold it perfectly.
Yeah, many times I see it is like it's order flow, but without any data and stuff. It's like, yeah, many times I see that there are some And it's actually funny sometimes. If I see a trader using fair value gaps going longs, I'll go short and I'll make money. Because not every gap is going to give print or maybe give me enough confidence to go in a trade. But with order flow, we can see exactly what's happening in the candle. That's where I feel if let's say if the concept like order flow would have never existed in the market, I would never become a trader. I would just continue my study in my college, never look at charts.
Honestly, I became profitable after I discovered on the order flow and volumes.
Oh,
I was profitable, but you know how it is. Sometimes profitable, sometimes
not consistent. Yeah.
Yeah, no, not consistent. And I was always feeling like there was a missing piece of the puzzle.
Exactly.
And I mean, yeah, like many different things can work, because obviously I've seen different traders, using different kind of concepts that actually been profitable without order flow, of course. But in a matter of fact, is like if you are just missing a puzzle piece in your trading, then you need to keep looking and trying things out and see what fits towards your market understanding, towards your system as well. Something that is going to give you, for example, confidence, something that's going to give you more data. For me, it was order flow and volume, because it gave me all of it. It gave me more data, reliable data, which helped me to understand why am I unprofitable, how can I increase the profitability, how can I more precisely determine the zones for my trading, for example, and timing for entering, exiting trades. But it also, besides all the technical aspects, it gave me the boost of confidence, because I knew that eventually I'm going to be profitable, because by default the edge is profitable. It was tested, first of all, and secondly, also besides all of this, it gives you the confidence that you don't really need to shift anymore 10,000 times the system, because the base that you have is already working. Because I think that a lot of people in the beginners, and me including, we obviously come to the market without any understanding. We try different concepts and we change and we change and we change, and it's very easy to fall into the loop of, we call it a paralysis by analysis, where you analyze it, when you apply different concepts and you study and you study and you study, but you actually don't trade, or you trade completely unprofitable no matter how much knowledge you have.
Yeah.
Hey, Jonatan.
Hey.
Hello,
How's it going? Hey, you don't have to call me sensei. You're not like you'll keep your job. It's okay. All right, Ayush, are you? Why are you not reading the chat? Been asking you. Are you the guy? Are you Ayush? Are you Ayush Shorts 57?
Yeah, it's me. And I said it's me.
Yeah, but I wanted to hear it from you, because what if someone comes in with my name and hey, make me a moderator? Okay, you're now a moderator. Congratulations.
Thank you. So I think my name will be in the blue color. Let me write something.
No, but you will have maybe it will. Am I?
Yeah. It got the blue color.
Hello, look at that.
Yeah.
Blue. Nice. It suits you. Looking good. Good. Another milestone in your career.
Yeah, thank you.
Yeah. Yeah, this is a promotion. That's right. You're not promoted to moderator. Luna Aluna. Is your name Luna? Is your real name Luna?
No, the real question is, when is the giveaway of the robot vacuum? I agree with Luna. Whether it's Luna or different name.
Luna, I hope it's her real name. Luna's a really nice name.
It is really nice name.
Oh, it's not. Okay. I'm sorry. Let's just pretend it's your name. I mean, you're Luna to me. So that's all that matters. I have if you're ever going into content creation and live streaming, I have a tip. Do not drink sparkle water when you're streaming, because you're barfing all the time. So I have to mute my microphone, otherwise it would be very rude. How are you guys doing?
Absolutely fine. After the
Good.
stop loss, yeah.
You say you're absolutely fine, and then you do this in your face like you are not fine at all. I like that. Every time, I'm fine. Oh.
That's
It's
That's
okay.
a typical face when you trade gold, Jonathan.
Gold, yeah.
Yeah,
That's the gold effect.
yeah. That's the gold effect. Okay, you guys ready for a little presentation? Maybe I should share my screen before we do that. So we have last week we talked about what did we talk about? We talked about
Trends. Uptrend,
identifying
downtrend.
trends.
Is it my internet or his?
Okay, it's every time I share my screen with the presentation, it's lagging like crazy. So I'm not sure how to best do this. The guest link. Okay, let me try that. So Roman, the producer here in the background, says I can join with another link. So I will try to do that. Yep, I'm gonna mute everything. Yep, okay, we'll try that. Is this better?
Yeah.
I think it's better. Now, okay. What does it look like? It looks pretty good. Nice. Okay, so last episode of The Trend was cut short because of a lot of technical issues, actually the same type of issues that we had right now. But what we talked about was to identifying trends using price action and structure. So today I want to talk about how we can also use technical tools, and I've chosen to look at the Bollinger Bands because I think the Bollinger Bands is a tool that is there's a lot of misconceptions with. It's lagging again.
Yeah.
This is ridiculous. I'm gonna. Yeah, I'll try that. I will. Yep, I will try that again. It's weird though. It's a very weird bug because it shouldn't. It shouldn't really. I shouldn't be able to like. My PC is like I'm running pretty good specs on this one, so it shouldn't be. Yeah, I did that before. I shared the window, I've shared the tab, and done everything here. So let me see what I can do here. How I can potentially fix this. So what I can do is I can see if I can share TradingView. Because we know that TradingView works. So I might just do the whole presentation within TradingView. Let me see if I can share, and that would also be more of a practical explanation of everything. Okay, so it looks like it's if you switch to my screen, it looks like it's working right now. Let's see, no lag as of yet. Nope. Okay, looks good. Let's see, we can go through this then. Because what I can do, let me see if I can do this. Give me a second, and I will see if I can do this. It's going to be interesting. just add it here, it works, right? Yeah, this is ridiculous, but yeah, but it actually works. Yeah. Okay, so I'm now using TradingView. Okay, so welcome everyone. The Trend episode number 2 is very highly technical stuff here today. We're doing a presentation about trading inside TradingView because no other apps is working apparently. So what I wanted to talk about was that, you know, obviously the whole idea with finding trends within the markets, it's very important, as I talked about yesterday. It's very important to understand the structure and price action, right? But we can also use, of course, some indicators to identify the trends. And I've chosen to look at the Bollinger Bands, right? For this, because I think it's an interesting indicator, because there's a lot of misconceptions around the Bollinger Bands. Kind of like a lot of people use the Bollinger Bands as a ranging indicator, but it's also a very good indicator to use in trending markets as well. So if we look at first, we need to understand what the Bollinger Bands actually is. We need to understand, and I'm gonna try not to show you all the slides, because I know that if I do it within TradingView with actual price action, I'm pretty sure it's gonna be much more engaging, and the message is gonna come across better. So let me simply just add. I'm gonna go to a clean chart here. Doesn't look very clean, but is this really the clean chart? Yes, it is. Okay, let me go to Bitcoin. So we'll go to BTC, USD. We'll look at the one on Bitstamp. That's my go-to one. And let's remove this. And then we're gonna add the Bollinger Bands directly on the chart here. Bollinger Bands right here. So to first understand the Bollinger Bands, we first need to understand what is volatility. So let me know in the comment section if anyone can have, you know, what's just one sentence explaining what volatility is. Maybe Boris, you just came in here. Can you explain what is volatility?
What is volatility? Oh my God. Wasn't expecting that question to start out with.
Maybe we can start with this. Maybe we can start with this. So first of all, welcome. Hi, how are you?
Hi, I'm doing well. How are you guys?
We're good.
All right, what is volatility? Well, to me, volatility is, I guess it's a measure of how fast or how slow price is moving during a specified duration of time.
Yeah, so, exactly. I mean, we can summarize it, right, with simply how price swings around its average, right?
Yeah, exactly.
What are the highest move to the upside and the highest move to the downside around a specific average? So if you have a moving average going through the price, and this is the Bollinger Bands, right? What we have here is if we go in and we add instead of a EMA, we can go in and we can add a exponential moving average, and one common one is the 21 or the 20. We'll go with 20, and then a normal way of measuring volatility would simply be, we look at the how far away does price go from the 20 EMA on average. So let's look at, for example, on a range for Bitcoin. Now this is a range, right? We have a kind of like a range low and a range high, and then you see how the 20 EMA kind of goes around here in this range with price fluctuating above it. So this is a swing low, this is swing high, and you measured from the 20 EMA to the low, from the 20 EMA to the high. This move is, look at that and you say, okay, that move is a certain distance away from the average price, and that is a measure of volatility, right? So then what is the Bollinger Bands? Okay. The Bollinger Bands is based on standard deviations around a moving average. If you go into the Bollinger Bands right here, you can see on input we have the 20, and that's the simple moving average, and it's based on the close. It's based on the closing candles. So it's the volatility of an asset based on the 20 simple moving average. So what is standard deviation? Now, standard deviation is you take the average, that would be the moving average of the recent closes. That's the center line, that's the one you see right here. And then you measure the spread of each of the closes. So for each closes, you measure how far it sits from that average. And the standard deviation is the typical size of that distance. In a normal distributed market, in a normal spread of a market, about 95% of activity falls within 2 standard deviation of the average, and that then becomes the average at where the Bollinger Bands is based on. So you see STD dev, that's the standard deviation, and that is set at 2. If we change this to 1, that is the first standard deviation, and if you change it to 3, so I believe that 99% or so of price action is within the 3rd standard deviation. 95 is within the 2nd standard deviation or something like that. I don't know the exact numbers for that. I'm pretty sure there's someone in the chat here who is well versed with the statistics, maybe. So this forms the Bollinger Bands, right? So you have the middle band, the 20, you have the upper and the lower bands, and this is based on the volatility of the assets. So the bands, they contract and they expand based on the volatility. Now, one thing that a lot of people don't know about the Bollinger Bands is that there are indicators derived from the Bollinger Bands. Now, the Bollinger Bands is very simple. It's a very, very simple calculation, and it's based on 2 things, and that is the percentage B indicator and the bandwidth indicator. Well, it's not based on those, but these are based on the Bollinger Bands. So if we add the Bollinger Bands percentage B, and then we go in and we add the bandwidth, then this becomes important, because what we're doing here is we're diving into technical analysis, which is a way of looking at these tools that a lot of new traders, they simply don't use these tools in these ways. This is how, institutional risk management and portfolio managers, this is how they apply technical analysis into their team of researchers to get a better understanding of the markets. It's not just as simple as, okay, let's add the Bollinger Bands and let's look at a rejection at the lows and then we buy. It's more complicated than that, and I'm going to show you how you can also use the Bollinger Bands here in identifying trends. Let's first get an understanding of what the Bollinger Bands percentage B is. This is simply where price is in relationship to the bands, right? So anything, if it's at 1, which is this red line right here, that means it's right on the upper band. If it's at 0, that means it's right on the lower green band. And if it's in the middle, that means it's right on the moving average. So it's simply where is price in relationship to the bands, which means also if it's below 0, that means it's outside the lower bands. If it's above 1, that means it's above the upper bands. So this is a very simple way of looking at where is the market right now in terms of the bands without really looking at the Bollinger Bands. And then we have the BBW, the Bollinger Band width, which measures the distance between the upper and the lower band. Okay, so when you have you can see, for example, right here, you have the upper band being very close to the lower band, and you have on the bandwidth, a very low reading, which means you have a very tight range on the band. And for those of you who are familiar with the Bollinger Bands and how to trade it, this is called a squeeze. So this is a way of identifying a squeeze without really looking at price. So what's interesting with this is you basically have the Bollinger Bands now as two separate indicators. Okay, we now know that when price is down here, there is a Bollinger Band squeeze, and there is a squeeze also right here with price being below the lower part of the band. Now this is important because if you want to take this a step further and perhaps look at developing trading systems or things like that, you can then use these indicators. Guys, can you just give me a minute, because someone just came home and I'm not sure who. There's not supposed to be anyone at home, so either it's a human being or maybe an animal of sorts. I'll be right with you guys.
All right.
Okay. Hello, Boris.
Exciting.
How are you guys? What are you guys trading today?
I usually want to say what you traded today.
I'm done trading. I was trading gold, and I'm humbly watching the price
You
action.
bought?
Nothing.
Did you win or lose?
Lose with
no.
just a wick, a very small wick, maybe tinier or thinner than my hair.
Sorry. That's frustrating.
Yeah,
I hate wicks.
me too. From today.
You still have you have tomorrow, and then you have Friday. So don't worry.
Logged out from my account.
Yeah.
Doing nothing.
I would delete your account. That's what I do. I take a loss. I just delete my account.
All right, I am back. I am back.
Was it a human? Was it an animal? What was this like?
It wasn't. Was a human.
Okay.
Almost a grown man. Can't believe like he's 15 and yeah, it's credible. It's credible. Yep. Okay. So we have the BB percentage here. So this is interesting. Like what I wanted to say here is you can also develop very interesting trading systems with these two Bollinger Bands derived indicators, and I would recommend everyone watching here, we live right now in the age of AI. If you have a job right now where you're not using AI, and maybe not using AI regularly, maybe you don't have as much insight into it as I have, but trust me when I tell you this, that AI is not going anywhere. We are moving into a AI first world right now. And you should be using AI to your advantage in trading. Maybe that is, and Anthropic has released their new model called Fable, which is Mythos for the public, right? And it's just insane. It's just absolutely insane. It burns through the tokens in no time, and it costs a lot of money. But what I'm saying is, like, we are in a year or two, we're gonna see probably AI software where you're going to be able to just have a trading system.
Yeah.
Now there's a philosophical discussions to be had about if anyone can create a trading system with the press of a button, then will trading systems be profitable, right? Because there always has to be one it's a seller for every buyer. So it's an interesting conversation to have, but take this knowledge and then feed it to an AI and start working on ideas, because the time of manually going through each bar with a replay tool in TradingView, it's over. You don't need to do that anymore. Okay.
I remember when I had to like manually backtest, like on paper, I would like actually track like when my system would take a win or loss on paper, because I didn't know how to use what's it called, Pine script in TradingView.
Yeah.
So the way I backtested was literally by paper, and it took me hours. And now I can do
that's
it
what I did
with I don't know, like 30 minutes maybe with Claude.
Yeah, I mean, there's still a lot to, you know, manually testing your trading system. I still kind of recommend, you know, watching price action, but when you have the screen time and when you understand structure and price action, it's going to take maybe a year or two or whatever. But when you understand that, you can then kind of go into at least have a semi-automated system where an indicator within TradingView perhaps will give you signals, right? And those signals you can then check and maybe take the trade or not. So at least, you know, try to look into having, you know, something, you know, semi automated. Okay, so let's go back to the Bollinger Bands here. Now we're going to keep all of these indicators on right here. Now there's a very common misconception with the Bollinger Bands. Now, how you all have learned to by the way, I have to run up because I'm afraid he's gonna eat all my candy. God damn it, I'm sick of his candy eating routines. He comes home from school, then he eats my candy, and then I go up and I say, where's my candy? And he says, I don't know. That's what I'm dealing with. Anyway, okay. The most common misconception, again, you know, a normal way of looking at the Bollinger Bands here is we touch the low and then we want to buy, right? And then we touch the high and we want to sell. We touch the low, we want to buy, touch the high, we want to sell. Now that is the mean reverting type of system that we look at when we're trading Bollinger Bands. But what if you're a trend following trader like me? You want to apply the Bollinger Bands to a trend trading strategy, and there's a couple of ways we can do that. First, there is a thing called, within Bollinger Bands, Bollinger Band theory, if you will, there is a thing called walking the bands. Okay. And in an uptrend, walking the bands look like this. It's when the markets are, you know, hugging the upper band like this. And instead of having that mean reverting characteristics where you go from the top to the low to the top to the low, it literally, you know, it stays above the middle moving averages, and then it kind of like hugs the band or walk the band. And actually there's a quote from a guy called Chuck Speth, who is actually the mentor of John Bollinger, who is the person that created the Bollinger Bands. And he says that the most bullish thing a market can do is to get overbought and stay that way. And that's really a lesson, because a lot of new traders, they come into the market and they add the RSI, for example, and they see that the market is way overbought, and they're like, well, now we have to sell off, right? And it's the same principle behind the Bollinger Bands. When you see like, oh, well, the market is now at the upper bands, it has to sell off. But the fact that the fact that price is at the upper Bollinger Bands just means that it's at the second standard deviation of the historical volatility, which means it's just more bullish than average to the upside. It's a bullish thing. Hitting the upper bands on the Bollinger Bands is a bullish thing, and that's what you want to see in a trending market. Okay, now we also have like local mean reverting place, okay, where you have an uptrend. Let's see if we can go back and look at places where that might have happened. So here, for example, you could perhaps see that so basically what you want to do, I don't really have any great examples of that now. Maybe this could be a decent example. Now, if this is an uptrend, which we believe it is, you know, here, then you want to be buying this market, but maybe you're seeing that we're hitting the upper band and we're, you know, walking the bands, but you want to be getting on a pullback. This is where that whole logic of buying the lower parts of the Bollinger Band makes a lot of sense, right? So we can, first of all, we can see that price comes in, test the lower bands. We see that we have a volatility contraction after a big move to the upside. We see the percentage, the Bollinger Band percentage is at a historic low. Same thing we had here, and then the bandwidth indicator is very low as well, telling you that there's a volatility contraction. And one thing that's very important to understand with volatility is that volatility is extreme seeking. And what that means is that volatility always becomes higher after it has been low, and it always becomes lower after it has been high. So when you have high volatility, you'll always go into a low volatility period, and with a lower volatility period, always after comes a high volatility period, which is also very evident if you look at the percentage B and the bandwidth indicator here. You see that it always comes from the low to the high, goes from the low to the high. It very rarely shops around in this range. You won't see like, okay, low volatility, then average volatility, low volatility, average volatility, and then high volatility. You almost always have low volatility to high volatility, which is very important to remember, because if you're in an uptrend and you have a squeeze on the Bollinger Bands with low volatility and you're hitting the lower bands, then you can expect to see a volatility expansion. And if you're in an uptrend, the odds of that volatility expansion to be to the upside is much higher than to the downside. Because again, we talked about the primary, the secondary, and the intraday trend in our first presentation. So what you can do is you can apply the mean reversion idea of Bollinger Bands and the idea of volatility being extreme seeking to the primary trend. And another way we can do that is to also, if we go back and look at the idea of walking the bands, right? We can look at this example. And now I want to remove the percentage B and the bandwidth. And this is a beautiful example of that, right? Now we see price breaking above this high. This is where Bitcoin was trading at 17K. Is it the low? Yeah, that's the actual low back in January of 2022. So it's a really great example to look at. Let's use the replay tool here so we can capture that. We're going to go back into the daily. Now, again, we have that breakout right here. Again, we can look at this. Now imagine if you're looking at Bitcoin here and you're thinking that surely this is the low and this is the price where you want to be buying Bitcoin. I mean, look at this. We go to the weekly. We are down. Let's say we're looking at this market. We are currently down 75%. And listen, guys, we are probably going down to those levels again. I'm not saying we're going down to 17K, but we're probably going down, maybe 70% from the lows. I mean, from the highs. So seeing it move back down like this again would not surprise me. And the pain that you've seen in the crypto market right now is nothing. It's nothing. It's down what, like 50%, 60%. That's a dip in the world of crypto. Wait till you get to 75 or 80%. That's when you can start thinking about, okay, maybe it's a good time to get into the crypto market again, right? People are slowly starting to get uninterested in crypto. That's a good thing, right? But it's not until the influencers leave the space that's when it gets interesting to start buying. Anyway, we go to the daily here, and what we can see here, we have a volatility squeeze, right? Again, what happens after a volatility squeeze? Well, high volatility. So if you think this is a high time frame bottom, the chances of having a squeeze to the upside, based on your analysis, might be higher than not. So maybe this is where you start buying your position. Look at that. The bandwidth indicator right here is at an extreme low. Okay, if we go back in the history of Bitcoin, the last time that happened was, let's see, in 2018. November 2018. So this is a historic low on the bandwidth indicator, which tells us that volatility for Bitcoin on the daily time frame is almost never this low, right? And then what happens? Well, you have a volatility expansion always, right? The question is just, are you going to be positioned on the right side or not? And this is where the idea of walking the bands will come into play, because we now have the breakout. Let's say you have an alert right here. Your alert goes off on the lower time frames. Right here, you have a daily close above, you have another close above. The mean reverting traders here will short this. They will say, well, it hit the upper band of the Bollinger Band, so I'm shorting. But now you know how to properly use the Bollinger Bands with different methods, the way the professionals actually use the Bollinger Bands, right? This is not, your normal influencer instruction video on how to short as soon as Bollinger Bands hits the high. This is a presentation on how to understand the likely direction of price action based on the overall trend, right? And in this case right here, this is a good example of how you have a potential shift in the primary trend. This is how you can get in as early as possible in the shift of the primary trend, which in this case means buying Bitcoin at 17K at the lows, which is obviously insane. Now, when you actually have that confirmation, you have the breakout and you see that price is walking the bands, right? There's a few things, a few indicators that you can add to this to confirm. And people familiar with how to use volume in trading and open interest and things like that will understand that volume confirms price, right? So when you have an uptrend on rising volume, that confirms the trend. When you have, open interest rising with a rising market, that also confirms the move. And what you want to do is you want to make sure that you add indicators that confirm a trend, or in this case maybe a shift in trend as well. So what is recommended to do is to use something like an ADX, for example. So the ADX, the average directional index, you want to make sure that it is above 20. Okay, it needs to be above 20 if you're going to be applying a walk the bands strategy. And this, of course, can be adjusted. The 20 level is the traditional level to use, but it's based on traditional finance. It might have to be adjusted for the crypto market. But you can very clearly see here that it did enter the below 20 when we entered this range, and as soon as we broke above this range, it actually is now trading at 22. So this is the first confirmation to look at when you want to apply a trend following strategy using the Bollinger Bands. Very, very simple, right? Just, is it above 20? Good. We follow the trend. And then there is also, let's see, the accumulation distribution oscillator. Okay, so if you go in here, I don't think it's actually available within TradingView as a proper indicator. So I will create one
indicator.
No, not the not the oscillator, just the accumulation distribution. But I will create one for you guys because I have the formula and everything, so I can just create it. Okay, so accumulation distribution oscillator, which we should have a let's see, maybe it's going to be this one. We'll add that one as well to see which one kind of makes sense. Okay, so they're basically the same here. I don't really like the look out of this, but they're basically the same. Okay, so what we want to have here, this is the second confirmation. The accumulation distribution indicator needs to be above 0. It needs to be positive. Okay, so if you're going to be buying an uptrend, walk the band strategy to the upside on the Bollinger Bands, you want to see price, of course, hugging the bands or keep closing above the upper band. You want ADX to be above 20, and you want the accumulation distribution oscillator to be positive, because that tells you that buyers are in control of this market, or at least buyers are on average outperforming the buyers. If you look at how the accumulation distribution indicator works, it's sort of like on balance volume. And I've talked a lot about on balance volume in the past. What it is basically, if it's a bullish candle, that volume gets added to the OBV. If it's a bearish candle, all of that volume gets subtracted from the OBV, which creates a line that goes up and down, right? Now, what the accumulation distribution indicator does, it not only just looks at bearish, bullish, and volume, it looks at the size of the candle. If there is a bearish candle with the exact same size of a bullish candle within an average range, it's going to show up the same on the accumulation distribution indicator, because then volume is not like, none of the sides are really winning. They're just going in a tight range. And then if it's like the bullish candle is much bigger, like here, it starts outperforming and moving, then it gets added to the accumulation distribution line. And then the accumulation distribution oscillator normalizes that in an that moves oscillates like an RSI. So that's the two things that I wanted to show you here with the how you can use it as a trending indicator. Now, what's very important here is something that is called, okay, let me see if I can pronounce it. It's called multicollinearity, I think it's called. And multicollinearity in technical analysis is the idea that you always have to add indicators that is derived from its own first principle. Okay? What I mean by that is, a first principle in technical analysis is volume, volatility, momentum, right? Those are first principles. So if you add the MACD and the RSI to the chart, you can sometimes see that, oh, the RSI and the MACD, they're now agreeing. We now have a good setup. But all you're doing is you're just adding two momentum indicators, and they're going to show you the same thing. It's kind of like you add 4 momentum indicators, and they all confirm a setup. That's because they all show you the same thing. They show you momentum. So you need to make sure that you're adding indicators that are not correlated to each other and not based on the same first principle. So the accumulation distribution indicator, first principle is volume. ADX, first principle is, I don't really know. I think it's direction or something, like maybe momentum or direction or something like that. I think it's direction, because then you can add an RSI or whatever. So that's very important to remember. Now, what we have on the chart right here is the Bollinger Bands. First principle is volatility. We have volume, first principle volume on the ADO. And then we have ADX, which I believe is a momentum or trend strength indicator. So different indicators all showing us different information, because what it's all about is try to get as much information as possible from different sources and then look at where they align. That's super important. Now, I know we're kind of going very much in depth here on the Bollinger Band indicator, but I don't trade using Bollinger Bands, but the reason why I don't trade using Bollinger Bands is because I simply have my own way of trading, my own strategy, and I like it. But for those of you who are new in the markets and you want to find a new trading strategy, you can create very good trading strategies with just using Bollinger Bands as your basis. I know people that work at big firms that manage risk across multiple portfolios, and all they have on the chart is the Bollinger Bands, the percentage B, and the bandwidth. That's all they have, and they are able to manage risk from a technical perspective across many millions of dollars in different portfolio holdings just using this. It's very simple, and that's the beauty in this simplicity. It's very powerful and very simple. Now, let me talk about something else, which I think is a very interesting approach to using the Bollinger Bands. And I don't think this is something that's not very often discussed within technical analysis and using Bollinger Bands, but John Bollinger has discussed this himself in a lot of his works. So there is this thing called, we all know about the double tops and the double bottoms, right? It's an M top and a W bottom, right? You have price coming in up in an uptrend, creating high, equal high, and then that's a double top, right? And then usually what you get is something like this, a break of structure. And then it's the other way around, right? That's a double top, right? That's a double bottom, a W structure. Now, if you look at this on Bitcoin, let's just assume, actually we can look at this. Yeah, okay. We're gonna look at this double bottom. Actually, we have two double bottoms here. We have one here. I'm just gonna look at this, one here. Actually, it's a triple bottom. Let's ignore that one. It's kind of like, I would view this more as a double bottom. So we have something like this, right? And then we have something here as well. We have two double bottoms. Now you look at this from a price action perspective, and you would probably look at this and you would say, wait a minute, that's a lower low, right? How can this be bullish? That's a lower low. Now, yes, this is a higher low, but it's still, just looking at price action, you wouldn't really look at this and say, okay, that's a perfect setup, right? But look at this, right? That left low is well below the lower Bollinger Bands, right? And this one is well within the Bollinger Bands, which means this is a very high volatility move. And this right here, you have volatility normalizing. And that will be shown on the Bollinger Band percentage B. Now, I really hope this is the case. Otherwise, I'm going to look very stupid. But the right low should be, if it's a bullish setup, which if we look at this, it is, it should be an uptrend, should be a divergence on the Bollinger Bands percentage, right? And it's a perfect representation over here. But what you have right here is, that's the first low right here. And then here is the second low. And this is how you can use the Bollinger Band percentage B to add confluence to your double tops and your double bottoms. Here you have a double bottom in price, and you have a beautiful double bottom. And it's important that the right leg of the double bottom on a bullish setup is higher than the left one. This tells you that price is now no longer in the highly bearish range of volatility. Volatility is starting to normalize itself, and you're not trading closer to the range. And then you have a squeeze. Again, what happens after a squeeze? Volatility is extreme seeking. You will have high volatility. Here you have a squeeze. What happened? You see on the percentage width that I don't have here, but this is the length between the high and the low. And then naturally it becomes a little bit wider here as price starts to break out the first time. Second time you get another double bottom, confirms on the percentage B. You have the breakout. Now let's put all of this together, right? You add the ADX, you add the accumulation distribution oscillator, and that's where you go long and you ride that trend. You walk the bands. Okay, now this is getting long. It's getting boring. I'm getting very close to the end here, but you can pretty much consider today's presentation as a ready-made foundation for creating a system. Download this video, put it into a software where you get the transcript, take the transcript, give it to Claude Code, let Claude Code create you a trading strategy, maybe only a semi-automatic trading strategy, but all the information you need to create something really good is all within this presentation right here. Now, let's talk about the Keltner channel, because it's not just the Bollinger Bands that has bands. It's also, we have an indicator called the Keltner channel. Now, the Bollinger Bands, we already know this, we talked about this. The width of the Bollinger Bands is based on standard deviation, and it reacts sharply to volatility, and it breeds a lot, right? It expands and contracts quite a lot, and is based on standard deviation of the moving average. Now, Keltner channel is based on an average true range around the EMA. So it's not based on the standard deviation, it's based on the ATR, which creates a bands that are more directly related directly to that asset's actual average true range, its volatility. Now, it's going to be much smoother, and it's going to be most of the time much narrower. So if I change the colors here to white, you can see the difference. Okay, so the Keltner channel. Okay, we got Black Cheek. So, Jesse P. Yeah, I banned you yesterday because you were acting like a dick. So you're not getting unbanned. I'm sorry. Maybe a couple of weeks. But this goes for everyone. If you're coming into the live stream and you're acting dumb repeatedly, then I'm gonna ban you. Okay, so back to the Keltner channel here. So you see the white lines. They are more often a little bit more condensed, right? Than the Bollinger channel, not the Bollinger Bands. Now, what's interesting with this is you can sometimes get a Bollinger Band squeeze inside a Keltner channel, and that is kind of like a double squeeze, if you will. If I buy you some fuck man, that's actually what I have in the kitchen. That candy, that Ferrero Rocher or whatever you used. Okay, I'm probably gonna ban you. Okay, you win this time. Let me think about that. My mouth is watering. Okay, so you get a squeeze, right? Here's a squeeze of the Bollinger Bands within the Keltner channel, and that's like a double squeeze, right? And when you get that, again, this is something you can put into an AI, and you can create a system around it. When the Bollinger Bands is squeezing within the Keltner channel, and you can then, the tighter you make the Keltner channel, you can see it right here, has a multiplier of 2. You can put it at 1.5, right? So it's going to be a 1.5 multiplier of the ATR. You can put it at 1, right? Like 1 ATR would be very tight for this one. And that's usually what you want to do when you have this strategy. So here you have a perfect example of that, right? Perfect example of that, with the Keltner channel being white and then the Bollinger Bands. So Bollinger Bands almost perfectly inside that Keltner channel with squeeze and a violent volatility eruption right there. Okay, so that's basically everything. But one final thing that I want to be adding is that Bollinger Bands was created way before the crypto markets, right? So if you're trading crypto, which you probably are because you're watching this live stream on the channel about crypto, so the Bollinger Bands, they're based on the closing price. And I have a theory that crypto markets might not care as much about the closing prices as traditional markets, right? Especially not the stock market, because the opening and the closing price of the stock market is very important. It's kind of like the most important, at least in my opinion, the most important price in the stock market is the closing price of the day. And for me, the most important price within the forex market is the weekly close. Okay, because that's where people kind of like exit the market. They can, relax, and they can go into the weekend and plan kind of like rebalancing, and they're going to be planning based on the weekly close a lot of times. Crypto doesn't have any closes. They're open 24/7, right? And this is also going to become true for the stock market once the Nasdaq goes into 24/5 trading. So we have to think about, is the Bollinger Bands basing on the candle closes? Is it really a good reflection of the market and the psychology behind market participants? So what we should look into is something called Bollinger envelopes. And I'm not sure it's available here. So this is one tool based on the Ehlers Kalman, and I think those are actually the guys who first released the academic paper and introduced the idea of Bollinger Bands into the world of TA. And as you can see, it looks slightly different. And this one also has buy and sell signals. But this is, I would recommend that if you guys want to have any, further research on this, then look at everything I gave you today. And then if you want to develop this into something truly unique and original, look at Bollinger envelopes, because I think that's going to be the future of this, because the markets are no doubtly going into 24/7 market. I wouldn't be surprised to even see like the Forex market it's probably going to take a time, but I wouldn't be surprised to see even the Forex market start trading 24/7, stock market 24/7. I mean, you're going to have the decentralized exchanges take over everything. I mean, we have Hyperliquid connected to Tradeify Crypto right now, so you can trade stocks here 24/7, and we're looking at potentially also including the indices, so you can trade everything, right? Again, before I close this completely, John Bollinger, together with TradingView, have a few years ago developed something completely new based on Bollinger Bands called Bollinger Bars. And this is also something that I would recommend looking into.
I've never even heard about that.
You never heard about that?
No, never.
No, this is interesting. It's actually a completely new indicator where, Bollinger Bars, basically. I think it shows like, not sure exactly what it does, but another thing to explore and look into when developing a system. So one of the reasons why I wanted to have this presentation with you guys today is to show you that there's a lot of talks out there about like all you need is price, all you need is horizontal levels. And I get that. I understand that in some cases, maybe most cases, all you need is just horizontal levels. You just need to get an understanding of supply and demand. But as we go into the world of AI, and the markets are going to be becoming more efficient, you might need to start to look at technical analysis in a more advanced perspective. The same way as if you're not using volume in your trading, you need to start using volume because it adds a layer not seen in price. And in 5 to 10 years, maybe even 2 years, everyone can become a trader probably by just pressing a button. There's going to be, the market's just going to be oversaturated with day traders, and it's going to make it more difficult to trade, I believe, because it's going to be the same from the institutional side. The institutions are going to become much more efficient in all of this. So just looking at horizontal levels, it's just not going to be profitable anymore, I believe, on an intraday perspective. On the higher time frames, it's always going to be profitable, right? If you're looking at the daily and the weekly, adding horizontal levels is always going to work, I believe. But on the intraday basis, you need more information than just the levels, I believe. Okay, that's it that's it for me today.
Nice.
Thank you. Thank you.
It was super interesting, actually. In fact, I didn't hear a lot of this information about Bollinger Bands ever in 10 years. And this perspective of the volatility as well. I mean, it's difficult to describe like what volatility is and how you deal with it, you know, and I think you really took the weight of explaining quite a difficult concept sometimes in very easy terms that everyone can apply after watching this presentation today. It's really great.
Yeah, I mean, the concepts is very simple. The idea, I think it's important as a trader, especially someone who is working with technical analysis. I think it's important that we understand what all of these concepts actually mean, and then how can we apply that knowledge to the market. So understanding, what is volatility, because we all say, okay, the markets are very volatile today, but what we really mean is the markets are moving, right? It's like, oh, the markets move today. But when you say the markets are volatile, like, what do you actually mean by that? And to ask that question for someone, like when I asked it to Boris, you had to actually think about it, right?
Yeah.
And we all know what it is, but can we explain what it is? And if and I think it's important that understanding what is momentum, what is volatility, because then when we understand those concepts at a deep level, it's much more easier to understand what actually happens at a low, what happens at a high, and how can we use that to enter our position.
So do you use any, I know you said you don't exactly use Bollinger Bands in your strategy, but do you use any of the indicators that you showed us for your trading and your longer term trend following investing?
So when I'm my long term investing is basically a structure. It's very simple. Higher highs, higher lows, I'm long. Lower lows, lower highs, I'm short. If it's in a range, equal highs, equal lows, I reduce my exposure. That's it, and that's why I said simplicity works very well long term on the higher time frames. Just pull up a chart of the S&P 500, and you'll see why that's the case. You buy uptrends, you sell. You do not buy downtrends, basically. And if you can keep doing that, you'll reduce your drawdown. But when it comes to more active trading and more analysis, so I'm not just a trader and an investor. I'm also an analyst, and I provide research as well. And in that research, I can help traders and investors to get a perspective that I might not necessarily have that perspective within my day trading, right? But I might give perspective on, what is volume doing right now? What is volume telling us about the trend? What is open interest and volume combined telling us about the market? What is momentum telling us right now? So there are a few indicators that I like to use to kind of get some more information out of the market, where from an analytical point of view, it can help me kind of deliver better analysis. Because as a trader, I'm very much about your structure and horizontal levels. But as an analyst, I like to use at least one indicator from each of these first principles. So the first one is going to be, I think we can go to this chart I have. The ones I always have on my chart is going to be first the moving averages. And like I've showed you with the Bollinger Bands, I also sometimes add the Bollinger Bands as well. But if you look at the 20 EMA right here, the white line, we kind of understand. If you've been in this industry long enough, you kind of understand where the second standard deviation is. based on the moving average. So the moving average also becomes my volatility indicator, because if price has deviated historically from the EMA, that's the low, that's the high, the distance between the low and the moving average is historically high, which I then know that it's going to be an historical high volatility period, which then goes into a normal volatility period, which then expands. And then I add the RSI, because I need to get an understanding of momentum. And as we talked about, when we were trading at 80K, we saw a weakening in momentum. We saw equal highs. We saw a couple of bearish divergences as we hit the highs. And then I'm looking at the accumulation distribution indicator as well, which I'm now thinking I want to switch that to the accumulation distribution oscillator. And that gives me the volume perspective, right? So the first principle, EMA, volatility, RSI, momentum, accumulation distribution gives me the volume picture. And as we can see here, if you look at volume, it's not very clear on Bitcoin, but it's very clear when we broke. Sometimes you have to really zoom in to get a better understanding of it right here. And what I would look at right here is these lows right here. And as you can see, when we break here, we break below a low on the accumulation distribution indicator after having a bearish divergence on the RSI, and also having probably a volatility contraction if you look at the Bollinger Bands. Okay, not really. But you kind of get the idea. So these are, I try to, it's not really, the specific indicator that you're using is not really important, because I could swap the RSI from a MACD. I could look at just pure volume instead of accumulation distribution, and I could look at the Bollinger Bands or whatever instead of the moving average. What's important is you understand how many first principles there are in technical analysis, and then try to see if you can add one of those, and then you'll have all the information that you need. Right, guys, we don't have a giveaway, so this is gonna be a quick one. Let's all type in BB in the chat, and everyone that types in BB in the next 2 minutes are gonna be winning an account. So we're gonna be doing just one. We're gonna be 1 minute late on this one, but let's. And if anyone has to go, obviously you don't have to stay.
All right, so yeah, I'm gonna hop off.
Okay.
For the informal presence, I want to actually maybe next stream talk about the BBWP, which is the Bollinger Band width percentile, which is actually an indicator that I use in my system. So
nice.
Maybe we can continue this discussion in the next few streams.
Yeah, I'd love that. Definitely. Let's do that. Yeah. Okay, so I'm sharing the duck race here. Let's see if we can, if it's gonna be lagging or not. Okay, I'm gonna be adding all the names here. All right, where is the chat? Lost the chat. Okay, here it is. All right, guys, just a few seconds left and we initiate the giveaway. Again, you only have to write your name. You only have to write BB once. You will be in the giveaway.
What's the giveaway for today?
Today we're doing a 10K two-step. We're doing today. You're laughing, Ayush.
I thought you would say something else.
Do you have any better suggestions? Because you can tell me something, and then I'll just go to Alex and say like, "Hey, Ayush, I know we talked about that, you know."
I'm good.
You wanna do two 10K? Is that what you're saying, Ayush?
Yeah, We can do it.
Okay. Well, this is your decision. So you wanna do two 10K.
Yeah.
Nice. You hear that, Alex? Not my decision. It's his. Okay, let's do two. We're doing 2. Okay. Let's go. You know what? We might be doing like give away like a hoodie or something. If someone says a hoodie, we're gonna do that someday. We're definitely gonna do that.
Actually, I think it's a cool idea to get a merge giveaway.
Yeah, I like that
I think
as well.
it's a
We should
super cool
definitely do
idea.
that. Yep. We should do that.
I saw that you got yourself the Tradeify water bottle as well, Jonathan.
Yeah, I don't know what it is though. I lost it. But I have it.
Oh my god.
I don't know. Like I think maybe I left it at I think maybe I left it in the gym. And I've been sick, so I haven't been there. So it's probably still there. We'll have to see if I can find it. Okay. Let's go. Quack. Okay, let me just add some more names. Okay, so we got about at least okay. At least 40 names. Oh, you're in there as well, Ayush.
Yeah.
He's always there.
Yeah, so what happens if you win?
I'll take it.
Yeah, of course. That's what I thought. Okay, we got 45 people. Nice. Okay, we got two winners. So we're gonna do 30 seconds each for these, and then okay, let's go. Do I have the sound? I have to mute this one. Okay, mute tab. All right, let's go. You guys ready? Let's go. All right, look at who do we have here? We got a police dog. We got Ayush Shorts is number 1 at the very low. Let's see what we get. We have Spider-Man. Yeah, you look weird today. Look weird. Okay, we got Opportunist. Yeah, Opportunist 7. Probably just comes
It's
in here.
Luna again?
Luna! No way, it's Luna!
Luna.
Wow,
You're
if you change
already-
your name, I'll give you a 100K. I can't.
Ah,
All right, Luna, congratulations. Awesome. Nice. You don't even have to confirm because I know you're here. Okay, so the first winner is Luna. Let me get your email and everything. Okay, so do you have
I do have her email. I think I sent you on the Friday. She won an account on Friday and today as well.
Oh, okay. She won on Friday, so we already have the email. But just in case, maybe you want to add your email to your YouTube profile, so we can make sure that we have you are you. Okay, next one. Let's go. So we got the second 10K account here. Oh, look at that! Look at that duck with the face mask and the cucumber on the eye. That's hilarious. It's like. She just got straight out of the spa. It's like, oh shit, Tradeify is giving away accounts. And Trump's there like, no way, man, I'm getting that. And then we have
oh no, just
What type-
don't let the Trump duck win. Come on.
Trump.
Trump destroyed crypto. We're not gonna give him anything. Okay, we got Axat.
Akshat, yeah.
Axat.
Chat 87.
All right.
If you're in chat, write something.
Actually, let me know if you're in the chat. You gotta write something. Yeah, okay, you're here. Nice. Let's go. Add your email to your YouTube profile, and I will get that giveaway for you. All right, guys, that's it for today. Thank you, everyone, for joining us here today. It's been a good It's been a good session despite the technical difficulties from Mike here in the first hour and then myself. Myself here with the presentation, but everything worked out well, and yeah, hope you guys liked the presentation here today, and we will see you all tomorrow. And tomorrow we have Anastasia's presentation.
Yeah.
We're gonna break a little bit of a brain tomorrow again about the order flow. So if you guys were joining last week, I hope it already settled by now, because tomorrow we are continuing in the same direction. So I'll see you guys there. And if you have any questions regarding volumes or order flow, tomorrow is also the time to ask. So
All right, beautiful.
I'm excited.
Yeah.
Great stuff. All right, take care, everyone. See you tomorrow.
Thank you, guys.
Bye-bye.
Thank you. See
Thank
you
you,
tomorrow.
guys.
Thank you, Jonathan, for today.
Thank you.